You'll hear about different markets that are like hot or booming or whatever, and then you might invest there or do a flip there, and then it doesn't sell for 5 or 6 months. So awesome. Well, thank you so much for having me. I actually love Backflip. So I've used Backflip many, many times for many, many loans. And I'm so excited that you're finally in California. So we do flipping in California, and then we do student rentals in other states. And so I've used Backflip for those other projects before, and now excited to start using it here. Building wealth through luxury real estate. So I am the founder of Veranda Homes, and so we do luxury flips in Southern California, so namely in Laguna Beach, and then we also do luxury student housing, which is a whole nother topic for another day, but that's super fun. What we consider to be luxury here in Southern California is, basically we buy for around 2 million and we sell for around 4 million. So if that gives you a little bit of context. And then our budgets are usually, somewhere around 700 to $800,000 for our actual projects. So we focus as a company on 2 different asset classes. So we do luxury flip projects, like I said, and then luxury student housing. But today we're just going to talk about flipping. So we only do coastal Orange County, and really we do just Laguna Beach and just in the, because that's where we live and that's where we work. And I am a big proponent of being a backyard investor or flipper so that you can be on site, so that you know your market, and so that you can, so that you have your finger on the pulse at all times, especially when we're dealing with these really high numbers. So stats from 2024, there's a few things. So we did a little over 24 million in flips. We sold 4 and bought 4. We typically have 3, oh, I'm supposed to have a little dash. We typically have 3 to 4 under construction at a time, and we do have a full-time crew. So our fundamentals as a company, so when you are doing luxury flips, obviously, your buyers expect a lot, and we want to make sure that we are delivering that as a really great home builder. So we're not just in there just saying, we're flippers and doing making it go as fast as possible and as cheap as possible and turn and burn. We are going as fast as possible. We're staying on budget, but really our fundamental goal is to deliver a great, well-built, beautiful home. A second thing is to be a great neighbor, and that counts for any type of price point of a flipper that you are. Your neighbors, it really makes a big difference, especially if you're in an area where you are doing a lot of business. Your neighbors will absolutely love it if you are polite, clean, and respectful to them. And make sure you follow all the rules, make sure you get permits, all of that stuff. And you would be surprised if you really do that and really are a great neighbor to those neighbors, they will be a great source of deal flow for you. So you can just ask, do you know anyone else that's selling, anyone that's moving? And they will actually tell you those things. Be a great boss. So contractors are so in demand, obviously. This is all the time, as you guys know, but contractors can go anywhere, work anywhere, do anything that they want, treat them really well. So we give, our contractors are gold to us. So we have a lot of mutual respect, and that goes a long way. And that's why our team has been with us for over 4 years. And then we provide white glove service to our buyers. So after we sell it to them, we are on call, we are there, we will fix, if anything needs to be fixed or addressed, we'll help them, order window coverings, we'll go over and above to help them get the stuff done that they need help with. And that really goes a long way as well. So behind the scenes, this is super important. And again, a lot of these actually obviously count for no matter if you're doing $100,000 flips or $4 million flips, but we only use the best contractors. So licensed, insured, bonded, all of those things. We have if anybody here is in construction or does this for a living, you've all either had the horror stories, lived through them, you hear the horror stories, those things all really happen. So we want to make sure that we're using great contractors. For Southern California, and I know in a lot of luxury markets, the key to success is really adding square footage whenever possible. So for us in Southern California or in Laguna Beach specifically, our price per square foot is $2,500 a square foot. That's our price per square foot. So if we can add 400 or 500 square feet in with an ADU or some sort of an add-on, to the house, that is a game changer, absolute game changer. And so I know that in a lot of different states, they call ADUs, different things, but if you can get that additional dwelling unit on your property, obviously permitted so that that space gets recognized, that is super, super key. Also, people just love, your buyers, they just love more space. They love having extra space. A lot of times our buyers, we really know who our buyers are, and our buyers oftentimes are either retired with grown kids, maybe they're, they have an elderly parent that they want to move in with them, or they've got grown kids that don't necessarily want to be in the house when they come home from college or from, with their young families. So having a separate living unit is super, super key for them, and they love it. Always get permits. So especially in this market, when your carry is incredibly expensive for your mortgage payments, you do not want to get a red tag. You do not want to get a stop work order. You do not want any of that to happen, because otherwise you can just be sitting on that property. And as you guys know, if you get a red tag, no one is allowed on that property. Not a painter, not a housekeeper, no one. Nothing can happen on that property. So that can be super, super difficult if you've got a fix and flip loan that's a 12-month loan, and then you have got a stop work order. That just makes a huge mess. So we just always get permits. We are very, very careful about staying on or under budget and timeline. That is the name of this game. Obviously, time, speed and budget. But we do plan for a little longer. So typically our projects take about 6 months, and then we plan for 9 months for the total hold time. And plan for risk factors. So if any of you lived through 2022, 23, the interest rate hike that happened, along with bank failures, all of those things, that made for a really difficult situation when we had some of our luxury properties for sale. So just always remember those lessons in the back of your mind when you're planning out your budgets. So super key. Again, this is for anybody doing this anywhere, but know your buyers. So we know that our buyers are typically in this particular market. So, we're buying houses that are 900 to 1,000 square feet. We're adding ADUs, or we're adding square footage, and we're selling properties that are 1,100, 1,200, 1,300 square feet. Our buyers tend to be, because of that, cash buyers who are, again, retired, kids have grown, they've always wanted to live at the beach, so they will come into Laguna Beach and finally live here, which is what they've always wanted to do anyways. These are the stories that they tell us. We also get a lot of first-time buyers. So we get a lot of, really successful young couples, who want to be in Laguna Beach to start their family. Laguna has a super well-known, very good public school system, so people love to come here to start their families. So those are kind of our two buyers, and that's really what we build for. So we understand that that's who the buyers are going to be, and because of that, interest rates don't really affect them too much, because oftentimes they are cash buyers. But we do, we really, when we're doing our design, we really design for those buyers. Be known in your market. So not only do we know our market, which is the other thing here, know your market, but be known in your market so that neighbors will tell you, basically for deal flow, so that agents will bring deals to you before they go on the market. We buy many of our properties off market before they hit the MLS. So oftentimes agents will bring those to us, which is great. Or again, you just ask around, and neighbors will tell you those things. And then know your market. I know, like the back of my hand, what the price per square foot is in particular neighborhoods in Laguna Beach, what the days on market are for particular neighborhoods in Laguna Beach. And these things are super, super important, right? Because in flipping, it's not really just about the, getting a great buy and doing great work and staying under budget. It's really about how long is that property going to sit after it's done? How long is it going to take you to sell that property? So really knowing that market and understanding which are the areas that sell the fastest, that's what you really want. So for us, we understand that, and I was a real estate agent in a previous life at a luxury brokerage. So I really know and understand that in this market, that really up to $4 million tends to sell, relatively quickly. Sort of between 4 and 7 million is a little slower, and then above that, again, for some reason, picks up speed. So if you are, that's why we stay exactly where we stay. So we don't really sell, we really try not to sell things for over $4 million so that the time on market or the days on market is as low as possible. And then know your numbers. So understanding all of the costs, and I mean all of the costs that are going to that you're going to deal with for the entire project. So not only carrying, but all of your insurance, taxes, all anything and everything that could happen during your project. You really have to have those numbers nailed down so that your underwriting makes sense, so that you know if you should even buy the project in the first place. And then obviously what you can sell it for. So this is the part that's fun about talking about Backflip. So why flippers use hard money loans and bridge loans. So I actually, one of my mentors when I first started in this business is a incredibly successful, very wealthy person. And he even uses hard money loans when he's buying, some of his multifamily and different things. The reason is, and he explained this to me very early on, is that for hard money loans, you can typically do obviously a lot less down. So when you're buying when you use a commercial loan or a more traditional loan, it's 30% down. And then obviously you have to fund all of your own construction. When you're doing hard money, you put less money down. So for me, because I'm so, very experienced, usually I can get somewhere between 10 and 20% down and then 100% of my financing. So even though it's a higher interest rate, it really makes sense to use this other funding instead of, your own funding or traditional loans or your own money for construction. So again, these are some of the reasons. So reduce the need for cash for closing and the project so that you can use your cash for closing and then use their cash for the project. A faster closing time. So these are asset-based loans. They can close sometimes as quickly as 10 days. It just depends on, what you've got going on and how well they know you. But you can do, you can get closings for sure in, 21 days, definitely less than 30 days. And that is really amazing to be able to, win bids, and move quickly. And then again, asset-based loans, so it's not just all on you or your income or your tax returns or anything like that. It's based on the asset. It is based on your credit score, so that needs to be in good shape. But this is really based on the asset, so it allows you to move quickly because they're just underwriting the asset. And then having long-term relationships is amazing. So they know me, I know them. They know that I'm a known entity, and so we can get our loans done a lot more quickly. So Veranda Capital. So Veranda Capital is our private equity fund that we actually launched in 2024. So a lot of people ask me how we do so many projects and how we have been able to scale quickly. And that is, we went from raising money, because typically we do our financing, but we also raise money in addition to that. So this allows you to, this really is next level, and the next step is it allows you to scale faster because you're always raising. So you have, money in your fund that you can use for these things. Hard money lenders are very used to using funds. They're very used to working with private equity. So instead of, if you are doing a flip and you've got, your friend and another friend that are putting money into the deal with you, first of all, if they're going to be on the loan, all of that everybody has to go through underwriting. And then any of the money that goes in actually goes into the LTV, and it turns into this whole crazy thing. So if you're raising a lot of capital for your projects, this is actually the best way to do it, the most legal way to do it, because it is a security and it's fully, it's an SEC regulated situation, and it just makes all of it a lot easier to work with. So why I love multi-million-dollar flips. I love it because you have the ability to focus on fewer projects with bigger returns. So you can go and do 10 flips in somewhere else that's where it's much less expensive, or you can do one flip. 10 flips is actually 10 times the work. it's 10 times the work to get your financing. It's 10 times the work to do the actual remodel, to get it staged, to get it sold, to do that, all of that paperwork on the sale. It's actually a lot easier to be super focused, for us anyways, on a larger asset with a larger return. And then for me, we live in Southern California and this is where we work. So especially when you're dealing with these high-end flips, super important to be on site every day if you can. So we do it because we actually live here. And then this is where to find me. So Veranda Capital is our fund. Marci Surfas is, I actually launched a course this last year to teach women how to do what I do. And to see our projects, it's verandahomes.com. And then you can find me everywhere on social media at Marci Surfas.
Amazing.
That's it.
Marci, so good. I have a million questions, and I know other people do as well. So
Okay.
excited to hop in and start to pick your brain a little bit.
Yeah, absolutely. Fire away.
Perfect. Okay, so I know a lot of folks here are in that sort of transition stage, right? So they've done some flips and they're moving into trying to scale. What were some of the first steps that you took to get into the luxury space? Like if people are doing single families that are much smaller, how did you, like, what were those first steps?
Well, I mean, I think it's really just, again, just knowing your market. So if let's say that you don't live in an area like, like Laguna Beach, but it's nearby, right? Because I do really think that you should live nearby. Do all the free things first. Like go to open houses every weekend. Like you really need to understand what's on the market, what it looks like, what it's next to, was it near, I don't know, like a water tower that's super ugly, or, you need to understand everything about it. You cannot just get a lot of this information just online and just from studying Zillow or Redfin or even the MLS. You really need to see and walk these properties. In addition to seeing how fast they sell, right? So both on for the existing and then the ARV, like what, properties that have been redone already, properties that are fixers. And then it gives you a chance to talk to the agents. So you can talk to the list agent that's there, or whoever's doing the open house, and you can really find out so much about that market. Agents would love to tell you, everything about it. So I say that is one of the absolute best things you can do, is literally go to all of the open houses in an area, because it's the only time that you're going to actually get access to that house, right? You're not just going to go knocking on doors asking them to see their house. So if you can actually get into the house and see it, it makes just a massive, massive difference. So I think that, and then really understanding and getting to know the agents in that area so that they will start to bring you deal flow. And really it's just about, swinging for the fences. You just do one first and then you're a luxury home flipper. Once you're done. You just gotta fake it till you make it. Yeah.
Making it sound easy.
Yeah, exactly.
Can you talk a little bit too? It sounds like obviously knowing your market, that's what you're speaking to here. Can you talk about how you got to know the buyers? I'm thinking, obviously I live in an area that is very close to luxury, area. And I'm
Yep.
thinking, I don't know that I would know exactly who these buyers are. How did you
Yeah.
figure out who they were?
Literally, that's just from experience. That's just from
Mm,
experience selling the properties and seeing
yeah.
who it is that has actually typically been our buyer.
Mm,
So that's
okay.
just, when I gave you those like details about them, that's literally because we've got, half of them have been retired people in their 50s or 60s, half of them have been newlyweds or
Got it.
people with young families. So that's just literally from seeing who the buyers were.
Got it.
Yeah.
Awesome. Okay, let me ask me these questions and
Okay.
so I don't dominate. Let's see. Raphael asked, are days on market higher in luxury homes versus average homes in the market?
It just totally depends on the market, right? I've got friends that, are investing in Ohio, and those properties don't sell as quickly as they had
Mm,
expected, or, whatever, for whatever reason, So
hmm
it just totally depends on exactly your market. So these are the things that you would research in, when you're doing your research about where you want to flip. You'll hear about different markets that are like hot or booming or whatever, and then you might invest there or do a flip there, and then it doesn't sell for 5 or 6 months. So doing that first work of seeing, instead of just by rumor, I heard Texas is hot, Raleigh is hot or whatever, you really
Yeah.
look at exactly in that exact neighborhood, what are days on market. And if you're not a real estate agent, right? So I was a real estate agent, I still am. If you know a market and you have an agent that you want to work with that you like, I always suggest, have them tell you these things. Like what's the neighborhood where it's the lowest days on market? These are reports that come out every single day at brokerages. They literally study days on market in where I live, Laguna Beach, Corona del Mar, Newport Beach, and we see like days on market, like what's going on. These are their talking points every day, every week at their sales meetings, all of that stuff. So you can actually see, and they'll tell you what the days on market are for a particular area.
Awesome. Okay. Super helpful. Got a couple questions to you about the fund. So can you give a brief overview of the fund structure? And then follow-up question was how it works with returns, minimum, setting it up.
Yeah.
Lots of questions there.
Yeah, absolutely. So the way that you set up a fund, you basically you go to an SEC attorney who will set up the fund for you. And typically, if anybody's ever done like a syndication for an apartment building, where you're a limited partner and then there's a general partner. So it's that same, type of structure. And they will do your private placement memorandum. And so for us, we have a fund, and our fund covers, we flip luxury homes in Laguna Beach. So that's our fund. We also have a fund for student housing. So basically, the private placement memorandum really just covers all of the things about your investment and also all the risk factors, and also, so that we can make sure that the investor has all of the information that they need to make a super informed decision. And so there's lots of paperwork that goes with that. You have to do blue sky filings, you have to do all kinds of things. And so your SEC attorney will do all of that for you and with you. So usually, they say the cost is somewhere around $15,000 to $30,000 to do that, to set up your fund, and then ongoing maintenance for that. But absolutely a game changer because, we do a $50,000 minimum. The returns are anywhere between 10 and 22%. It just depends. With a fund, it's different than a loan. So you can do we have a pref of 10%. So our preferred interest, guaranteed interest is 10% on their money. And then there's a profit split in the end. So that's how it goes can go all the way up to 22%. And yeah, it just takes, it's just the ability to constantly be raising into that fund again, so that you can operate more freely and strike more quickly on properties.
Right. Super interesting. One of the things I had written down was raising capital. If you could talk just a little bit more about what that process has looked like, your experience there. Super curious.
I would say, interestingly, so when I first started, it was a lot of friends, right? And the fun thing about that is it was literally, they always say, don't underestimate anybody. I had people that I had no idea that they had just all this disposable income to invest. And so I would tell them what I was doing. Hey, I just started flipping properties, and they'd be like, oh yeah, I got 250. I'll give it, it was like that. I literally had no idea. So that was super fun to see. It has been, I reached out to everybody that I knew. When I first started raising money, I reached out to everybody that I knew. Friends, not really family, because I didn't really have that kind of a family, but lots of friends, lots of colleagues, and they were super generous and super supportive. So I did get a lot of help in the beginning from them, and then that really transitioned into now raising from people that I don't know. And that's kind of the goal also with a fund, is really to broaden out your ability to raise from basically from the public. So that's why raising capital becomes a lot easier, is when you're doing it at scale, which is the only way to do that is with a fund.
Right.
And you can do that, really, I always tell my students in my class, like, really establish yourself as an expert, as an area expert. If you establish yourself as an area expert, like I absolutely 1000% know Laguna Beach, and I know how to flip in Laguna Beach. I have a great relationship with the city now. I have, this whole crew, all that stuff. when you establish yourself like that, you become a known entity for people to invest with you. So they have, they have faith in you and trust in you that you know what you're doing. It's super, super important. More important than the deal is actually the operator. So if anybody has ever invested in, you thought that it was a great deal, but maybe it was somebody new and there were some bumps along the road with that, that's why those things happen. So really, if you are wanting to raise capital, really dig in, establish yourself as the expert in who you are, what you do, and where you do it. That's what people want to know. They want to know that you are the expert and that you are going to literally guard their money with your life. That's the most important thing. You need to be super trustworthy. So I say, go in, do your social media, go really, do a business social media, push where you're on Instagram, Facebook, LinkedIn, so that you really become the expert in that. Even if you have a full-time job or a W-2, if this is something that you're doing on the side, you can absolutely still establish yourself as an area expert on social media as well.
Yeah, I love that. Well, and you're speaking to trust, which is a question we got. When you started raising funds from folks, what were you providing them to trust you to invest their money?
Yeah, I was providing them promissory notes and liens, obviously. Yeah.
Right. Great.
And high interest rates, good interest rates.
Good interest rates. Marci, thank you so much. This is super informative.
welcome.
I've got my notes here, and so this is a really valuable session. Thank you so much for your time. Really
Absolutely.
appreciate it.
Thanks for having me.
Yeah, thanks, y'all.